G'day traders, I'm Greg McKenna. It's the 23rd of November 2018, Friday, and we have had a relatively quiet night for foreign exchange, save for the pound, which was higher. Obviously, Thanksgiving holiday in the United States, but stocks were down. Chinese stocks were down in Asia yesterday. Then some Italian funkiness, which didn't really hurt the euro or Italian bonds, but certainly got people worried in stocks. And maybe it was just the weak. Probably was actually just that weak close that we saw in the US on Wednesday. So we've seen weakness there. The interesting thing is that US futures were weak as well. So it could be another ugly Friday or an ugly close. Those lows of October and those lows of this week need to hold. Otherwise, this could be really an unfortunate close for stocks that will then send them closer or toward those medium-term targets that I have. I'm not one that knows when the target's going to get hit. I just look at prices and where they're going to move, that kind of thing. But if we see last week's or this week's lows get taken out, October lows get taken out, then we're looking tenuous, particularly for the DAX and the S&P. The Nasdaq's already looks like it's on its way. Anyway, so foreign exchange, everything's pretty stable. Aussie was under pressure a little bit, but it held up relatively well because of the US dollar weakness, which was sterling induced in the face of the Aussie, that is, in the face of this equity weakness. We'll see if we can get it done quickly today because there's not a lot of moving parts. Gold's around 1227. Bitcoin's around 4,500. Copper hasn't moved. There was some strength in base metals in Shanghai and London. But let's dive straight in. I want to talk about the OECD. The OECD has downgraded growth. Now, lots of people will be wringing their hands saying, ooh, ah, ooh, ah. There's the data on the screen. The reality is that, yes, we've gone from 3.8 to 3.7 to 3.5 for expectations over probably the last 3 or 4 months. But the reality is that this is just back to the long run average. So the global growth profile is not weak. Not yet. They may have to downgrade those. And the reason I say that, have a look at those. We heard from the ECB last night. They're trying to put a happy face on the fact that there's been this massive slowdown. The CC score, Citibank Economic Surprise Index for Europe, is negative 54.7 or something like that. But Peter Praet's going, hey, look, things have obviously slowed, but she'll be right. I don't know how they do that, but that's important to note because if the Fed does, which I think it will, pause after another 1 or 2, then what's going to happen to the US dollar is going to depend what's going on in Europe and going on in Japan and going on here in Australia and going on in the UK and all those kind of things. So it's not just a simple, oh, if the Fed pauses, the US dollar gets dusted. It's more complex than that. Anyway, if you're wondering why President Xi and the Chinese are making sounds like they need a deal, check out this from Macquarie Bank. It's on Business Insider. Have a look at Business Insider Australia. David Scutt has written this article this morning. So this is the average of the market and MBS manufacturing PMIs and what Macquarie Bank's got, which is a China index. It suggests more weakness. So more weakness coming to the Chinese economy. Now, we know that's true. Why do we know it's true? We know it's true because the Chinese authorities are telling economists and letter writers and journos to not over-egg the fact that the economy is slowing, which means it's slowing. So that's going to be a handbrake. But it also means that perhaps the Chinese are likely to deal. Because one of the things is, while there's this hegemonic battle going on, while President Xi is putting the Communist Party at the center of everything, he still does not want the same thing that happened in 2009 to ever happen again, which was 20-odd million people go home for Lunar New Year and don't go back to work. Not without a stimulus anyway. So I think that's really important. That's something to keep in mind. Now we'll dive into the charts and we'll do currencies first. And then I'll just make sure I'm on the right one because I was playing with yep, I'm on the right one. I was playing with the weekly charts a minute before I started this video. Right, Euro. Didn't do much last night. There's not a lot of setup. We've essentially got a box, this little box here. It's got to break up and through last week's highs. If I can pick that up. For some reason it hasn't been picking up my fractals very well. So that's 114.70. If you can get up and through 114.70, it's at 114, then we can go to the next level. Then we can say that the dollar index is going down. Then we can say that dollar yen is going down. And I'm going to go straight to dollar yen. And I want to show you dollar yen in weekly terms. Now, I know I do this on Mondays, but I want to show it to you today, weekly. Right. Have a look at that. What does it look like? Nah, not a lot, right? But as soon as you put a Fibbo over it, you can start to see the roll. You know, this inability to get through 114.50. And you know how I've been saying 114.50 to 175, it's got a 114.75, it's got a break. I've changed that to 114.75.80 because that fractal there is 73 and there's another fractal somewhere that was 80 something, right? So I've drawn a big box around dollar yen for today's written piece. And so to that extent, I could also draw a trend line here which says dollar yen's really got to get a move on. Otherwise, we're going to see it back at 110.75. I guess that would need stocks to fall out of bed, which might happen. That would mean that the Aussie's going to get belted, most likely, but we'll have to wait and see. But for the moment, you can see the momentum's just starting to wane in this very, very long-term resistance zone. If we can get through, then we're talking about 118 plus. So that's really important for dollar yen. On the dailies, you know, you could draw a little trend line there and a little wedge there, and a break either side might reward very, very short term. In terms of sterling, the only really major mover last night, but in the broader sense, what have you got? Well, you've got a clear tradable bottom off 126.90, so, and the bottom of the range is 126.60. So we know that a breakthrough there is going to, all hell's going to pay. Then you've got two, you know, like, not two, but five or 6 days of stability here as well. And you've got this big update. So it's clear that people are trading off that low on that big fall, which is 127.20. So an adventurous trader who wants to play inside the range could do that. My sense is Mrs. May's winning. Now, it's not obvious in what the DUP says. It's not obvious in what Dominic Raab says. It's not obvious in what her own side, the rest of her own side. It's not obvious in what Jeremy Corbyn says. And as I've said, you know, this is in many ways the worst of all deals, which is what Jeremy Corbyn said, because it satisfies nobody. But in satisfying nobody, it also speaks to compromise. So this is a complex thing. You know, the British people did not get what was on the box when they voted. A lot of things that no one spoke about or thought about or was honest about. So, you know, I guess the chance of a second referendum's there if it gets defeated in the House on the Commons. But we'll have to wait and see. For the moment, though, you know, buying on any pullbacks seems to be what players want to do. In a broader sense, it's 126.5 roughly to 133. And as I say, for me, if there's no need to trade it, I'm not trading it. The battler is stalling, a bit like everything else. So it's fallen out of that. You'd probably draw it across there now. That's what people will be looking at. Didn't really do much last night. It was weak at one stage. It was strong at one stage, but its range was, you know, not overly exciting for me. It did bounce back nicely, which was good. So where are we now? I think we're still kind of in limbo. You know, the fair value is around 73 cents, but that's not a trading thing. It just tells you that everything's baked into the cake. So if stocks fall, the Aussie will be under pressure. No doubt about that. Because if stocks fall and the Aussie's under pressure, it's going to be associated with copper falling, those kind of things. But then that depends on how the US dollar is impacted as well. So from my point of view, on a day basis, I'm not overly excited by it. On a week basis, it's an ugly inside week, as you can see there, which doesn't tell me much, but does look slightly ominous. So keep an eye on that. In terms of dollar CAD, well, we had another reversal last night from, and I can't find, there's dollar CAD. Right, so we're back on this trend line. Is that trend line going to hold? So if 131.70 breaks this time, then there'd be a fair chance, and then we'd be talking about weak US dollar and all that kind of stuff. Because dollar CAD is down, even though oil lost another 1% odd. But of course, even though some people trade, and to be honest, the dollar CAD has got a pretty strong relationships in the mid to high 70s, mid to low 80s with the price of WTI. The actual price that is being received by Canadian producers because of their own infrastructure difficulties is a material discount to that. So anyway, but yeah, if you broke back down through this, and you'd probably say that's the level, right? So 131.26, but a breakthrough 131.70 gets you another 50-point fall, and then if that breaks, then all bets are off, and we're going to be talking about sort of 130 something or other, 60, 70 probably. So we'll see. So there's 50 points down. See if it holds. 50 points down below that. And if that trend line holds, well, then the US dollar will have reversed. Stocks will have had a good day. Maybe the Fed does something, but there's not much out. The market PMIs are out tonight, and German GDP. Now, the Kiwi is, like the Aussie, stuck in a bit of a range. It needs to hold above 67.80. If it falls down through 67.80, its goose would be slightly cooked, or its Kiwi would be slightly cooked. But we'll have to wait and see how that happens. But either side, it'd have to break either side of the 5-day range for me to get too excited on Kiwi. Kiwi doesn't excite me much. Dollar yuan, I'm going to put this in the weekly because I talked about this in the daily. There's a fibbo there, obviously. It's holding above there. The Chinese are holding it at the moment. They don't want it to weaken. If trade talks go badly, and my sense is they will let it weaken. If that happens, we are talking about 725. If not, and we can get down and through 687, then we'll be talking about 669 or 67. So keep an eye on that. That's probably the most important, besides the S&P, that's probably the most important asset price, certainly the most important foreign exchange level on the planet right now. Looking at gold on a weekly, that's the weekly chart. Still trying to build momentum to the top side. It's got to close above 1238 to get really excited though. Dailies, you can see it's walking up this uptrend and would need to go above 1238 to get really excited. But it's showing all the signs of doing that. Copper, still within the range. Time to extend that. Just got to lean forward for a moment if you don't mind. So what do we got? We got, 1282, 1283. But then you got 1286 above that. 1286 and a half actually. So we're ratcheting either side of this at the moment. Copper in the Aussie, if we get a good resolution, and I've talked about this in Markets Morning because I've got some stuff from Stan Druckenmiller, who was George Soros's lieutenant and a masterful hedge fund manager in his own right, talking about the Fed needing to pause. As I've written, my sympathy for the pause idea has grown materially. Now, I know I always bag Neil Kashkari and all that kind of stuff. But now that the Fed is where they are and now that they're going to hike in December, if they're only going to do 2 more hikes, what's the rush? Even if they're going to do 4 more hikes, what's the rush? Because there is a lot of uncertainty about what might happen. And if the lesson of the best central bank on the planet, which is the RBA, is to be learnt, it is move. So look, act, move, wait, look, act, move, wait, rinse, repeat. That's how the RBA's got us through almost 3 decades without a recession. So I do have some sympathy for those calls. But if the Fed does pause, if there is a trade breakthrough, the Aussie and copper will roar. So an inside of an inside. Don't like inside days, don't like inside days. But that just tells you that the market's trying to build momentum. Last night's fall does look tenuous, but let's face it, thin markets. All right, so what do we got? The first instance, this is Brent, is that if we get up and through 64.50 or down below 61.60, things will get moving. If you look at this on the weekly, it's got to hold above 60.50. Otherwise, we're going to be talking about $44. Now, Khalid Al-Falih, the Saudi oil minister, said that in January they will reduce shipments because he believes customer demand will be lower. But likewise for WTI, so he's trying to say we're going to tighten the market, but that's December 6th is the OPEC meeting. And he's conflicted by Khashoggi and President Trump. And the King will be driving traffic here. So we've got an inside day of an inside day. If we break up and through 55.82, that might get us towards that trend line at 56, so a good buck. But if we go down and through 52.75, then we're starting to look wobbly. And remembering that 51.5. So is the thin Thanksgiving Day market the day for the push that looks to see if there's anybody down there at these crucial levels in Brent and WTI? Or is it the day when the bulls can exercise themselves? I'm not sure, but they're the levels to watch, the ones that I've just identified. In terms of stocks, US futures last night were down, looking extremely tenuous. Really, really tenuous. 2600's got a hold in the S&P. If it does not, we're talking about 2400. We are really talking about 2400. If it closes below 26. A break on the day, you might sell quarter of your normal position, but a close below would be a change. Dangerous time at the moment with the G20 in just a week, but still, that's the way the charts look. We can't worry too much, but fundamentally, don't forget what I do is I do fundamental and technicals. Now, we had a tradable low, talked about that yesterday. It's been good. Hasn't been able to get up through 5.723. We've backed off quite significantly from the high and then down 35 points overnight. Tone's not going to be good today. Essentially, you've still got that tradable low. If we go down through 5.0586, then we're looking at 5.449, which is what I identified. But while above 5.586, then we should be able to at least base and head towards 57.23. But you wouldn't want to be trying to catch a falling knife in our time zone today. But often the physical ASX does strange things. Now the DAX, if I can find the DAX, there we go. From the weeklies, right? If you put a wedge across, a box around that, and then you just say where's the negative 1.38, it's there. So we are at a critical juncture. If that breaks, then I'm going to be talking about 10.5, but medium term I'm going to be talking about 10. And I've just realised for a quiet day I've gone way over. That'll pretty much do. Bitcoin is same story. Same story. So nothing to add. Righto, German GDP, flash PMIs, that's pretty much it. Have a good weekend. Watch out for the price action. Futures could have been a head fake last night in thin market. I'm not sure. So those levels I've talked about are the keys to watch. Anyway, have a great weekend. I'll be doing my analysis on Saturday and back with you on Monday. Bye for now.